Now, it's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, September the 7th, 2016. We have some great trading opportunities ahead of us with some very big news pending, some strong trends, and a couple trading ranges to work with in tomorrow's session. Crude oil is bullish, gold is bearish, while the S&P and Euro are both trading sideways ahead of the opening bell in Asia. I have a jam-packed newsletter in store for you guys. We got a great plan of attack for tomorrow. We got some news to prep for. Before we jump into it though, as I always remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. Not to worry, if you're watching the video on our YouTube channel right now, it's only a small snippet of the entire newsletter video. There's a link in the description of the YouTube video. Follow that link. Come over here and join me on the blog at Sideways Markets and watch the full-length version. While you're here, don't forget to join the newsletter mailing list. I'll send you an email every evening, Monday through Thursday evening, when that nightly newsletter is ready to go live. Below the video, you can download all the charts you see me using in tonight's video. Have those charts ready on your computer, locked and loaded for tomorrow. Grab your free pass in the upper right-hand corner. Come out and join me as a guest for a few days this week in the trade room. And of course, don't forget, you're going to learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. I can guarantee you that. And I'm always standing by here, to answer all your questions 24/7, 365. Hit me up on the live support button on the right-hand side of the website. Hope you guys are having a great week here. It's a shortened holiday week. Monday, of course, being a holiday means everything's been pushed back 24 hours, and we got some big news coming for us tomorrow. Now, before we jump into Thursday's session, we got some late evening news here. Our good friends from Japan are going to be giving us the GDP number here tonight at 7:50 p.m. Eastern Time, just a few moments away from when this newsletter gets published. So be aware of that if you're trading in Asia. But of course, the big news tomorrow, though, shifts to two big announcements here. The big one tomorrow morning in the London session will be the ECB announcement. Of course, everybody's trying to figure out what's going on in Europe right now ever since the Brexit. And of course, we're going to hear from the ECB announcement. They, of course, just like the FOMC announcement, will be talking about interest rates, et cetera, et cetera. That's going to be the headline news report tomorrow morning. Then, of course, if you're a crude trader or if you're an S&P trader, you want to watch out because at the end of the morning session in the U.S. session tomorrow, we have the 11 a.m. petroleum status report. Now, that should look a little bit odd to you because it's usually on Wednesday mornings at 10:30. In fact, I wish they did this every week. I would much rather have the petroleum status report, the inventory report, on Thursdays at 11 o'clock. Maybe we could petition the EIA or the DOE on that. But bottom line is, until that change happens, we usually get the inventory report on 10:30 on Wednesdays. Because Monday was a holiday in the U.S., it was pushed back to 11 o'clock on Thursday. This gives us a nice, big, wide open space here between the early morning news at 7:45 from the ECB, which we do expect to have long-term implications here on all the markets we trade tomorrow, and of course that 11 o'clock petroleum status report. The one thing I want to remind you about, though, is if you're trading crude, be careful leading into that report. It does get very, very illiquid and then extremely volatile after that news report comes out. Now, the odds go down, our reliability goes down significantly post-inventory report. So watch out for that tomorrow. And not to forget, we're going to be in the trade room tomorrow morning with all of our students here at School of Trade, all of our advanced members, and we'll do it all with you guys. All right? Don't forget, our chat room is open tomorrow morning for that ECB announcement. And of course, we'll be in the trade room tomorrow morning for the petroleum status report. Tomorrow night, we get some major news coming out of China. We'll talk more about that and the plan for tomorrow's newsletter. Right, in about 23 hours and 15 minutes, we'll talk more about that news coming out of China tomorrow night. So big news tomorrow, 7:45, and then, of course, 11 a.m. for the petroleum status report. And again, careful trading around the inventory report if you are a crude trader. And don't forget, the S&P 500 loves to shadow crude on inventory days. And, of course, we'll do it all with our students tomorrow morning. How about some charts here, Joe? Crude oil, start with crude, a little bit crude, S&P, gold, and maybe a little bit of the euro this evening to wrap things up. Crude is bullish and trying to finish the measured move up to the highs of a bull channel this evening. The bulls have control and will be looking to buy pullbacks on the way up to the targets listed above, above, but with such strength on the way higher, we may only get a spike in channel or a spike in range to work with. So short-term buyers should be looking to buy with traps below prior support levels. Sellers have zero proof right now, and we assume that any pullback off these highs will be seen as a buying opportunity. For the bulls, we can't even think about being a seller until we see a strong breakdown for those sellers and a hole below the battle zone at 45.22. Obviously here, the day starts off with a trading range. We talked about this yesterday, right? It's a bull market until proven bearish. This is a great example of that today. If you stuck to the plan from last night's newsletter, you were not only prepared, but you were able to capitalize on this move after they finished off, right, the range-bound scenario. We were expecting a little bit of range-bound price action this morning just because of such big volatility that we saw yesterday. We talked about that in last night's newsletter. It's very important that you keep up with the newsletter. If you can't watch the whole video, definitely make sure you keep up with your market every evening, right? Because we like to build from session to session. Bottom line is, though, the day starts off here inside of a trading range. There's a bit of a triangle, right, that we found here this morning in our trading room as we focused on buying low of that triangle, right? Because, of course, the long-term trend being a bull market coming out of yesterday's session. Then, of course, we have a strong spike up. This, of course, leads into the API inventory report, and we're heading our way up to that double up and that measured move resistance overhead. The very first thing that stands out to me right now is, wow, that's a really strong move higher. What do we always think about when we see a strong spike like this, right? Spike in channel, spike in range. So buyers are definitely looking at this as potential for a spike and channel, spike and channel, spike and range. Right? Not as common as a spike in channel, but spike and range. You know, really the bottom line right now is the buyers are clearly in control, but I'm hesitant to be buying right at the high of that move, right? So what I'd like to do here is when we see a move spike up like that, wait for that pullback, and then that pullback becomes, right, there's a lot of information inside that pullback. First of all, that pullback gives you a spot now to buy with traps, right? Place those buy orders, right, to buy with traps below that pullback. It also allows us now, if it goes back up and makes a new high, to now draw in a spike in channel. So that pullback then allows you now, take those two highs, bring it on down, and that will give you your spike in channel, right? If we get a spike in channel, we're looking to buy with traps below those lows or buy with the correction back into the correction zone of a spike in channel, which of course puts us right down in this area right here. So bottom line is we really want to see a pullback here just so we can get something to sink our teeth into. If it does spike and range, spike and ranges are definitely not as common as spike and channels, but spike and range, same thing, right? Looking to buy with traps, below those lows. That way we're not buying high, right? We want to do our best to participate in this move, but we want to buy the low of the range. If it's a bull spike and channel, we want to buy the low of that spike and channel. So big spike up here right now. We don't know enough about it yet, but we would love to see here. If we can get this first pullback here, that pullback will now give us a chance here now to sink our teeth into below that low, looking for traps there, and then of course set things up here for a spike in channel or a spike and range. The key is we want to be a buyer, but we'd rather not buy at those highs. Now, what if we don't pull back at all? What if we finish the move right up to that measured move or that double up? That'll put us up at the high of that channel. And like we always say, whenever we get to a market objective like this, we're looking for that two-legged correction and then a move back up to that high. Really, at this point now, it's either pull back into a range or into a spike in channel so we can buy the traps below the lows, or if it finishes the run up to that measured move and double up, we either need to see literally a runaway market breakout pullback, right? That's not as likely to happen, but it is a possibility tomorrow. That will be the only opportunity here to be a buyer, will be a very strong breakout pullback right above the high of that channel. What would be more realistic though here on this would be to see that two-legged correction back down to those channel lows, back down to an area of support, and then that move right back up. Remember, just because we get to the measured move does not mean this becomes a bear market. It's still a bull market, and anything that pulls back here right now will be seen as a buying opportunity here for those buyers. So if we get the full pullback, then wonderful, right back down to that low of that channel, but that spike tells me we're probably going to get either that spike in channel or that spike in range. Either way you slice it, find those swing lows, look to be a buyer at those swing lows with traps, with failures, and then of course into pullbacks as we try to go back up to retest that high. If it does keep going right up to that measured move, that's a market objective. Scenario one, the lower desirable objective here, or the lower desirable trade, will be a strong breakout pullback. That's not going to be as reliable as the two-legged correction back to an area of support, such as the moving average or the low of that channel for the move right back up again. What about the sellers? What can the sellers do right now? The hard part right now is that literally anything above this 45.22 we have to assume is going to be seen as a buying opportunity. Now, remember, we get inventories tomorrow morning at 11 o'clock. It's not as bad as a 10:30 inventory report. We have still a full morning session tomorrow morning with all of our guys and gals in the trade room tomorrow. So we're not going to have to deal with that inventory report too much, but there may be a bit of self-fulfilling prophecy, and so we may have to deal a little bit with some slop and chop ahead of that news report towards the end of the session tomorrow. Other than the news report, anything above that 45.22 is going to be seen as a bargain here as we come back and try to run through prior swing highs, a naked reversal line there at 45.58, and then kind of the low of this trading range. So of course, sellers right now, you can try to gamble with a short back down into that range, but the moving average will be waiting here for you, so you got to get to it quick. If you want to be a seller, double top at the measured move, that'd be the most aggressive, right? The less aggressive here would be a breakdown below the moving average, hold that pullback, right? Either a double up, right? A double top reversal off of that measured move, which is extremely aggressive because it's a bull market, or looking for that breakdown, pullback, get that moving average to hold, right, and then back down. And it's really not going to be a very easy market to sell, though, until we can get and break down below that 45.22 tomorrow. All right, get a plan here for it. We'll see what it does next few hours. And again, watch out for that news tomorrow morning. How about some S&P? The E-mini S&P is sideways and trading at the highs of the range this evening. The bulls have control after a beautiful example of the two-try rule at the lows of the range, and now the pendulum should swing in the opposite direction, allowing the buyers to get a breakout pullback up to the range expansion targets at 87.5 and 89.5 tomorrow morning, before the sellers will likely try to take this price back down into the range again. Buyers will be looking for a breakout pullback above the range highs, and sellers will be looking for that breakout to fail for a move back to the range low. Great example here of a trading range. Day starts off inside of a trading range. Sellers try once, sellers try twice. When they fail, buying opportunity back inside that range. A classic scenario of we teach in our intermediate course, and of course we use in our range day strategy, right, in our live trade room. We have, of course, a trading range. Trading range, of course, tells us buy those lows, sell those highs, look for the two-try rule, and don't forget about the pendulum swing. The pendulum swings all the way down. Yeah, that pendulum is likely now going to try to swing all the way back up. So heads up here on that target for the buyers of around that 89.5. Remember, what creates a sideways market, and we're going to see one of these on the euro in just a moment, what creates a sideways market is balance. When the market tries to break out of balance, think about the pendulum swinging all the way lower, it will typically now move back, not just back to the high of that range, but just like any other pendulum, will swing all the way back, right, in the opposite direction. Buyers right now are hunting for that 89.5. They've got two targets, in my opinion. You'll notice here how one target halfway, other target up, one target halfway, next target up there. So watch out for that 87.5 and, of course, that 89.5. It's amazing how symmetrical these ranges really are. It's a beautiful self-fulfilling prophecy that comes with it. Buy low, sell high, use that pendulum swing, and focus on failures. Now, how do the buyers get into this thing? Because you've probably heard me say this before, most breakouts fail. most breakouts fail. So what I don't want to do is try to be like these buyers back here and try to buy the breakout here. I don't want to do that. What I'm looking for is I'm looking for a breakout, a pullback, and this